All right, so you want to go deeper than just the crypto headlines, right? Like you actually want to know what's happening.
Yeah.
You sent us a ton of stuff, articles and research, even like your own notes.
Uh-huh.
But the big one here is this report from Andreessen Horowitz.
Right.
It's called The State of Crypto.
It's a good one.
Uh,
What makes it so useful is that Andreessen Horowitz, or Andreessen, as they're sometimes called, they're really deep in both the traditional tech world and the crypto world.
Yeah, they've got a good perspective.
They really do. So they can see like the big picture.
And it's not like they're just watching from the sidelines either.
Oh, no.
They're putting their money where their mouth is.
Exactly. They're backing some of the biggest names in crypto.
Yeah, so when they talk,
People listen.
people listen. So by the end of this deep dive,
Yeah.
you'll be up to speed on what's happening, but you'll also have the tools to figure out like what's real and what's just noise.
Oh, yeah. Tons of noise out there.
Tons of noise. So
Yeah.
the report starts with a pretty big number. 220 million blockchain addresses
Okay.
were active in September 2024,
Wow.
which is an all-time high.
Yeah. So at first glance,
Right.
it looks like everyone's using crypto now.
Right, exactly.
But it's important to kind of dig a little deeper.
Okay.
Because 220 million addresses
Uh-huh.
doesn't necessarily mean 220 million people.
Okay, so
My
what are we
God.
talking about here? Like, are we talking about bots or something?
Not bots, really, but there are a few things that inflate that number.
Okay.
Think about it this way. You probably have a few different email addresses, right?
Yeah.
For different things.
One for personal stuff, one for work.
Exactly.
Yeah,
One maybe just for online shopping.
exactly.
It's the same thing with crypto wallets.
Okay.
People have multiple wallets for privacy, for security, or because they're using a bunch of different blockchains.
Right. Okay. That makes sense.
Mhm.
But the report also talked about something called whale manipulation.
Oh.
What is that, and how does that affect this whole active address count?
So a whale in the crypto world
Okay.
is someone who owns a huge amount of a particular cryptocurrency.
Mm-hmm.
And these whales, sometimes they try to manipulate the market
Okay.
to pump up the price or to dump their holdings to make a quick profit.
So if a whale starts rapidly trading large amounts of crypto,
Yes.
it could look like there's more activity, even if it's just one person behind a bunch of different wallets.
Yeah, that's exactly right.
Yeah.
And since most of that whale activity happens on-chain,
Mm-hmm.
which means it's recorded on the blockchain,
Right.
it can really skew the active address counts.
So how do we cut through the hype and figure out how many people are really using crypto?
Well, the A16Z's team, they went beyond those raw numbers.
Okay.
They did some really smart data analysis
Okay.
to filter out all that noise, and they estimate that the actual number of active users is probably somewhere between 30 and 60 million people
Okay.
transacting each month.
So that's still huge growth.
Oh, yeah, definitely.
But that also suggests that crypto adoption is still in like its early stages.
Yeah, absolutely. The report thinks that only 5 to 10% of crypto owners
Mm-hmm.
are actually actively using it for transactions.
Like,
Imagine if only 10% of people with driver's licenses
Right.
were actually out driving cars.
yeah, that's a great analogy.
That's where we are with crypto.
Yeah, that really puts things into perspective. Massive untapped potential.
Massive.
All right, so let's move on to something that's been kind of quietly shaking things up.
Okay.
Stablecoins.
All right, this is where it gets really interesting. The report says that $8.5 trillion,
Trillion with a T.
trillion with a T,
Wow.
was transacted using stablecoins in the second quarter of 2024.
Wow.
To put that in perspective, that's more than double
Okay.
the transaction volume of Visa.
Okay, so it's safe to say that stablecoins are more than just a little experiment.
Oh, yeah.
They're becoming a big deal in the global economy.
Absolutely.
Yeah.
And it's not all speculation either. They're basically becoming the foundation of the crypto economy,
Really?
facilitating everything from trading and lending
Right.
to international payments.
Okay, so this is something from the report that really blew my mind.
Okay.
Stablecoin issuers are now the 19th largest holders of U.S. debt in the world.
Yeah.
Like, they're surpassing entire countries.
It's crazy, right?
It's incredible.
It really shows you how much influence stablecoins are starting to have. They're becoming a force in traditional finance.
So what does this all tell us about stablecoins in the real world? Are they just for crypto traders, or are they having a bigger impact?
Well, the report takes a look at Argentina.
Okay.
As the Argentine peso's value went down,
Yeah.
trading volume in stablecoins just exploded.
So people were using stablecoins as like a safe haven from inflation and economic instability?
Exactly.
That?
And it shows you the real world problems that crypto and stablecoins in particular are starting to solve.
Yeah.
They're giving people a way to protect their savings
Wow.
and participate in the global economy even when their local currency is failing them.
That's powerful.
Yeah.
It really shows how crypto is moving past just speculation and actually solving real problems.
Uh-huh.
So if stablecoins are already doing this, what's next for the crypto world?
That's a great question.
What other innovations are coming?
Yeah, the A16's report digs into this.
Okay.
It dives into the world of blockchain development, which is like the
Yeah.
whole landscape of innovation.
Okay, so we've got explosive growth in users.
Uh-huh.
We've got stablecoins transforming finance.
Uh-huh.
What else is happening in this building, Boom?
Yeah.
Everyone's talking about layer 2 solutions,
Yes.
but it honestly can feel a bit overwhelming.
There is a lot of buzz about layer 2s.
Yeah.
But basically, they're extensions built on top of existing blockchains like Ethereum.
So like add-ons to
Exactly.
make the original blockchain better.
They're designed to fix some of the problems that older blockchains have,
Okay.
like slow transaction speeds and high fees.
Right, because no one wants to wait forever for a transaction to go through or
Right.
pay a ton in fees.
Exactly. And this is key for mainstream adoption.
Right, because it's just not practical otherwise.
Exactly. But what's interesting is that even with all the focus on layer 2s,
Yeah.
the report says that core development on Ethereum isn't slowing down.
Really?
Actually, it's attracting more developers.
So it's not layer 2s versus Ethereum.
Right.
They're working together.
They're both important. Layer 2s are important for scaling and usability,
Okay.
but they're not replacing the underlying blockchain.
Yeah.
Ethereum is still a major force,
Mm-hmm.
and developers are still building on the core protocol.
So it's like building a skyscraper.
Exactly.
You need a strong foundation.
Yes.
That's Ethereum.
Yep.
And you need innovative extensions,
Uh-huh.
which are the layer 2s.
To create something amazing.
Create something truly remarkable. That's a great way to think about it.
And speaking of building,
Yeah, where are all these developers putting their energy? Is it all DeFi or are they looking at other stuff too?
DeFi is definitely the hotspot right now.
Okay.
Developer activity in that sector is up 3.5% from last year,
Wow.
but it's not the only game in town.
So what else is attracting them?
Well, there's growing interest in blockchain gaming non-fungible tokens,
Okay.
NFTs,
Right.
and even where crypto and AI intersect.
Wow, it sounds like the crypto landscape is getting more and more diverse.
Yeah,
More exciting than ever.
for sure. But before we go too far into all these trends,
Okay.
let's take a quick break.
Okay.
And we'll come back to explore one of the most interesting things highlighted in the report,
Right.
the rise of decentralized exchanges.
So welcome back to our deep dive into the state of crypto.
Before the break, we were talking about stablecoins, right?
Yeah, the surge in stablecoin use.
Yeah.
And that whole world of blockchain development.
Uh-huh. Particularly those layer 2 solutions.
Right.
I'm still trying to wrap my head around how they can make Ethereum even stronger.
It's a cool dynamic.
It is. But let's shift gears a little bit
Okay.
and talk about another trend that's changing things up in the crypto world.
Right.
Decentralized exchanges,
Okay.
or DXs.
DTEX. Okay. Remind me, what is a DX?
Okay.
And how's it different from the exchanges that, like, most people use?
So most people trade crypto on centralized exchanges, like Coinbase or Binance.
Right.
These platforms, they act as like middlemen, right?
Yeah.
They help people buy and sell cryptocurrencies.
So it's like a traditional stock exchange?
Exactly. You're basically trusting the exchange to handle your money
Right.
and make your trades.
Yeah.
But DX,
Yeah.
they're different.
Okay.
They use blockchain technology to make a peer-to-peer trading environment.
So you're cutting out the middleman?
You got it. It's like trading directly with another person
Okay.
without needing a centralized platform.
Interesting. And the A16 size report highlights that DXs are getting more and more popular.
Uh-huh.
They now account for over 10% of crypto spot trading volume.
That's a pretty big shift.
Yeah, 10%. That's a lot. So why are people going with DXs? What are the advantages?
One of the biggest draws is control.
Okay.
You have more control
Mhm.
and transparency.
Okay. So when you trade on a centralized exchange,
Yeah,
you're kind of trusting them with your funds.
that's right.
With a DX,
Yeah,
you have complete control over your assets because they're in your own crypto wallet.
exactly.
More control over your money always sounds good.
It does.
What about the transparency?
So with DXs,
Okay.
because they operate on the blockchain,
Mm-hmm.
all the transactions are publicly auditable.
Okay.
Anyone can look at the code and see how it works.
Okay.
And that transparency builds trust,
Okay.
and it helps reduce the risk of fraud or manipulation.
Okay. So more control, more transparency, and potentially less risk.
Yeah.
But earlier we were talking about the whole meme coin craze, and I'm
Hmm.
kind of
Yeah.
wondering if DXs are all about on-chain trading.
Uh,
Why didn't they get more popular during that whole meme coin thing?
yeah, that's a great question. And the report kind of touches on this, but doesn't really answer it.
Okay.
It's a little strange, right?
Okay.
Because meme coins were super hot.
Yeah.
And most of the trading was happening on chain.
Right.
But DXs didn't really see a boom in volume.
That seems weird.
It does, right. Meme coins are going crazy.
Yeah.
Most of the trading is on chain, but DXs aren't really part of it.
What's going on there?
Well, it suggests that there are other things going on besides just on-chain trading.
Okay.
One possibility is liquidity.
Okay.
Centralized exchanges usually have more liquidity,
Okay.
which means there are more buyers and sellers.
Okay.
So it's easier to trade large amounts without affecting the price too much.
So maybe during the meme coin craze, people cared more about liquidity than about decentralization.
It's possible.
Okay.
It's also worth thinking about that a lot of meme coin people,
Right.
they might be newer to crypto,
Okay.
and they might be more comfortable with a centralized exchange interface.
Right. That makes sense.
Using a DIX can be a little more technical,
Yeah.
but yeah, this whole meme coin to DX thing,
Yeah.
definitely something to watch,
As the crypto landscape keeps evolving.
for sure. And speaking of evolving,
Yeah.
there's another interesting thing that the A16's report looks at.
Okay.
Central bank digital currencies, or CBDCs.
Oh, yeah. CBDCs, it seems like every week
I know.
there's a new country launching a pilot program or something.
It's moving fast.
Or exploring digital currency.
Yeah, and the report gives a good overview of where things stand globally.
Okay.
It's not just a few countries anymore.
Right.
Most of the world's population
Wow.
now lives in a country that's either testing or actively developing a CBDC.
So it's not a matter of if CBDCs will become mainstream. It's a matter of when.
Seems that way.
Yeah.
A few countries have already launched their CBDCs.
Okay, like who?
Nigeria, Zimbabwe, the Bahamas.
Interesting. So some countries are all in,
Huh.
while others are just dipping their toes in.
Yeah.
Have any countries said no to a CBDC?
Yeah, a few, actually. The report mentions a couple that have canceled or paused their CBDC projects.
Okay.
Ecuador and Kenya both stopped theirs,
Okay.
and so did Denmark.
So every country is approaching it differently.
Right.
Some are excited about CBDCs,
Yeah.
while others are more cautious
Right.
or have decided it's not for them.
Yeah, but why are so many countries looking at CBDCs in the first place? What's driving this trend?
Yeah, why?
There are a few reasons. Some countries see them as a way to upgrade their financial systems,
Okay.
make things more efficient.
Okay.
Others want to increase financial inclusion, especially for people who don't have access to banks.
Okay. That makes sense. But there are also some worries about CBDCs, right?
Yeah.
Like privacy issues and too much government control.
Yes, those are definitely concerns, and the report talks about them.
Okay.
The level of privacy and control that a central bank builds into its CBDC will be different in each country.
Yeah.
And it's being debated all over the world.
So the CBDC landscape is pretty complex. Lots of moving parts, competing interests.
Yeah. But the A16's report points out a big moment in CBDC history.
Okay.
The war in Ukraine
Okay.
and the sanctions that were put on Russia.
Why was that such a turning point?
Well, the report says that it sped up CBDC development,
Okay.
especially among central banks that wanted to find alternatives to the current global financial system,
Okay.
which is mostly based on the US dollar.
So the war in Ukraine
Yeah.
and using financial sanctions as like a geopolitical tool,
Ah.
that made some countries look more seriously at CBDCs as
Exactly.
a way to not be so reliant on the US dollar,
Right.
create a more balanced financial system.
That's the idea.
Wow, so global events can really speed up tech innovation.
It can.
It's a good example of how interconnected everything is
It really is.
and how technology is shaping global events.
For sure. Okay, so we've got CBDCs on the rise.
Yeah.
DeFi is booming. DX adoption is increasing.
Yeah. But before we wrap this up, I want to go back to something we talked about earlier.
Yeah.
Blockchain burnout.
Oh, yeah.
The report mentioned there's some fatigue setting in
Yeah.
with all these layer 2s and new blockchains launching all the time.
It's true. There's a feeling that there are too many blockchains now.
Okay.
Everyone wants to build the next big thing.
Right.
And it's hard to tell what's really important.
Yeah, remember when paying gas fees on Ethereum was like a huge problem?
Oh, yeah. It was so expensive.
It felt like you were being punished for using the network.
There was a big barrier to entry.
It was.
And that's exactly what Layer 2s have fixed. They've cut transaction fees by like 99%.
Wow.
The report says it now costs less than a penny to send USDC via base,
That's amazing.
on average.
So layer twos have made a real difference
They have.
in terms of usability and cost.
They have. They've also increased throughput a lot.
Yeah.
Blockchains are processing 50 times more transactions per second now
Wow.
than just 4 years ago.
But even with all these improvements, the report says that people aren't as excited about new blockchains anymore.
Yeah, it's not the shiny new toy it used to be.
So where does that leave us?
Yeah.
Are we going to see things consolidate, or is there still room for new blockchains to succeed?
It's hard to know for sure,
Okay.
but I think it's safe to say that the bar is higher now.
What do you mean?
New blockchain projects have to offer something really special and valuable
Okay.
if they want to stand out.
So it's not enough to just be another layer two
Right.
or another Ethereum competitor.
Right. You need a good reason to exist,
Okay.
and you need to solve a real problem.
Okay. So even though there's this blockchain burnout,
Yeah.
underneath that,
Uh-huh.
there's a push for better development.
Yeah. More focused, more meaningful.
Like the industry's growing up.
It is.
It's getting more serious.
Yeah, it's a sign of a healthy ecosystem,
Hmm.
moving past the hype and focusing on real solutions.
This has been great.
It has.
We've covered so much.
So much ground.
Stable coins, DeFi, CBDCs, even blockchain burnout.
Yeah, and we've seen a clear trend.
Yeah. What's that?
The crypto ecosystem is maturing.
Yeah.
It's not about hype anymore.
Right.
It's about real-world adoption and impact.
Totally agree. It's an exciting time, and I feel like this is just the beginning.
The future of crypto is bright.
I think so too.
I can't wait to see what comes next.
All right, so let's pause here
Okay.
and come back for the final part,
Sounds good.
where we'll talk about who these crypto builders are,
Yes.
where they are in the world, and what they're building.
Well, what?
The what? Welcome back to our deep dive into the state of crypto. We've covered a lot of ground already.
We have stable coins, layer 2s, CBDCs, even a little blockchain burnout.
But now I want to focus on the people behind it all.
Yeah.
The builders who are shaping the future of crypto.
Right. In the last part, we were talking about how the crypto world is maturing.
Right, moving beyond the hype.
Yeah. So who are these builders that are making that happen?
Yeah. Who are these builders?
The report gives us a really interesting look at the global builder community.
Okay.
It looks at something they call builder interest,
Okay.
which is based on surveys of founders and developers.
Okay.
It basically tracks which blockchains people are most excited to work with.
So where's the action happening? Is it all Silicon Valley or is it more spread out?
It's definitely global.
Okay.
The report found that over 40% of blockchain developers are in North America,
Okay.
but Asia is catching up fast. Over 30% are there.
Makes sense. Crypto is global.
It is.
So it's natural that development is happening everywhere.
Yeah, are there any particular countries that stand out as crypto hotspots?
Yeah. Are there?
The report highlights India
Okay.
as a rising star in the crypto development world.
Interesting.
They've got tons of talented engineers,
Okay.
and the government has been pretty supportive of the crypto industry.
I've heard good things about India's tech scene.
Yeah.
So it makes sense that they're doing well in crypto too.
Uh-huh. But what about the specific blockchains that developers are most interested in?
Yeah.
I'm guessing Ethereum is still the king.
Okay.
Ethereum is still attracting the most builder interest, over 20%.
But it's not the only one, right?
No, it's not.
So who are the challengers?
What-
Who should we be watching?
Solana is a strong second,
Okay.
with over 11% of developer interest.
Okay.
And right behind that is Base,
Okay.
also with almost 11%.
That's pretty impressive considering how new Base is.
It is.
So Solana and Base are giving Ethereum a run for its money.
They are. But what about all those other blockchains?
Yeah.
Are any of them attracting developers? The report mentions a few others.
Okay.
Avalanche and Cosmos are both around 4%.
Okay.
So they're tied for fourth place.
So it's still pretty top heavy.
It is.
But even if they haven't overtaken Ethereum,
Right.
it's good to see other blockchains like Solana and Base
Uh-huh.
attracting talented developers and building their own ecosystems.
Definitely competition is good for innovation.
Right. It pushes everyone to get better.
Exactly. We've talked about the where and the who.
Right.
Now let's talk about the what.
Yeah. What are these developers actually building?
Yeah, it's all well and good talk about developer interest and rankings.
Right.
But what really matters is what they're making.
So what's cooking in the crypto kitchen?
The report breaks down builder activity into a few categories.
Okay.
Blockchain infrastructure, like we talked about earlier,
Right.
is a big focus. 19% of all developer activity.
Makes sense. You need a good foundation to build on.
Exactly. But I bet DeFi is still the main attraction.
Yeah. Is it?
It is.
Okay.
DeFi is still the biggest area, almost 25% of all development.
Wow. So despite all the ups and downs,
Mm-hmm.
DeFi is still the heart of the crypto revolution.
Yeah, it's where most of the action is.
And within DeFi,
Yeah.
what are the hot areas?
The report highlights a few areas where there's a lot of innovation happening.
Okay.
Real-world assets, payment systems,
Okay.
and of course, decentralized exchanges.
Right, which we talked about earlier.
Exactly.
It's exciting to see DeFi expanding beyond just lending and borrowing.
It is.
It feels like we're just getting started with what's possible.
I agree. Especially with the integration of real-world assets,
Yeah,
that could unlock a ton of value
it really could.
and create brand new financial instruments.
It feels like we're on the verge of something big.
It does. But before we get too carried away,
Yeah.
let's go back to something we talked about before.
Yeah.
The potential for ETH to become even more valuable as Layer 2s grow.
Yeah. That still feels a little strange to me.
It is an interesting idea, right?
It is.
That as more activity moves to Layer 2s,
Right.
the demand for ETH,
Uh-huh.
which is the native cryptocurrency of Ethereum,
Right.
could actually increase.
I keep thinking that if everything's happening on layer 2,
Yeah,
wouldn't that mean we need less ETH on the main chain?
that makes sense, but it misses one important thing.
What's that?
Almost every Layer 2 built on Ethereum
Yeah.
uses ETH for fees and collateral in its DeFi protocols.
So even if I'm trading on a layer 2,
Yes.
ETH is still working in the background.
Exactly. It's like the fuel that keeps the whole thing running.
Wow.
And as more people use Layer 2s,
Yeah.
the demand for ETH goes up.
That's incredible. So instead of layer 2s hurting ETH,
Right.
they could actually help it.
It's like a rising tide lifting all boats.
Wow. It shows you the power of good system design
It does,
and how connected everything is in the crypto world.
for sure. What happens on one layer affects the whole network.
Well, I think we've covered just about everything in this A16's report.
I think so too.
This has been a fantastic deep dive into the state of crypto.
It has been.
We explored stablecoins, the evolution of DeFi, the rise of CBDCs,
Uh-huh.
and the work of builders all over the world.
And we saw a clear trend.
Yeah,
The crypto ecosystem is growing up.
it is. It's moving past hype and speculation
Okay.
and into real-world use and impact.
It's exactly. It's an exciting time to be watching this space.
It is. I have a feeling we're just getting started.
I think so too.
Well, that wraps up our deep dive into the state of crypto.
Hope you enjoyed it.
We hope this gave you a better understanding of the trends shaping this exciting world.
It's a dynamic world.
What surprised you the most?
Yeah, let us know.
Leave a comment or a message. We'd love to hear your thoughts.
And keep exploring. The crypto world is always changing.
There's always something new to learn.
That's the beauty of it.